Thank you, David. I actually have to say I was really looking forward to this panel because one thing that became clear in the prep session is that they don't really need a moderator to ask questions. They really just needed more time to talk. So with that, I think a quick round of introductions would be good. David, do you want to start?
Sure. Afternoon, everyone. I'm David Mortimer, co-head of real estate debt at ICG. We've been investing in real estate debt since 2010. And since that time, I've invested about €8 billion equivalent in over 200 deals now across the UK and more recently into Europe.
Hi, Clark Coffey. I run AllianceBernstein's European real estate debt business.
Hi, Radkiewicz, Global Head of Private Debt Strategy for PGIM Real Estate.
Hi, Anja, Ritchie. I'm a managing director at StepStone Group in Frankfurt. And for those of you in the German market that don't know us yet, we are a private markets firm. We have, on the real estate side alone, about 12 billion in assets under management and close to 180 billion in assets under advisory. With that, I think we'll start with the first question. Let's talk about the evolution of ESG in real estate investing, in particular maybe focusing on the real estate debt side, of course. Where are we coming from and what are drivers for the future? Would you like to
I'll
start?
kick off with that. I mean, the first thing I think everyone in the room would agree is the speed of change and the speed of needing to understand the impacts of ESG in its broadest sense. I think there's sort of three areas that are relevant to real estate debt. We've obviously got SFDR on the one side, which is Article 8 or 9. We've got EU taxonomy, how that translates into the investors' side of things. And we've also got, obviously, the loan market side and green loans and sustainability-linked loans. So it's the way of actually practical engagement with that and practical execution. And I think we're now moving into that phase. There's been a lot of chat, what it means, define the terms. I think we're firmly moving into needing to engage with borrowers and investors and actually start explaining how, as a debt manager, you're executing with a very strong sustainability hat on.
I would echo that, and I think if you look back 10 or 12 years, if we're honest with ourselves, ESG was not really a factor in decision making. It was not a factor in manager selection, choice of investments, wasn't really a factor in occupier requirements for real estate either. That evolved over the 2010s, and I think probably 3 years ago, we started seeing the first green loans, sustainability-linked loans. We saw the EU taxonomy. And where we stand today, I think that probably every manager here has either closed or is looking to close green or sustainability-linked loans. And